Welcome once again to the official launch of the Global Money Week 2023. If you've never heard of Global Money Week, you might be wondering to say, what is Global Money Week? Well, this is an annual global awareness campaign that is there to ensure that you hosted St. Pius Primary Girls School as well as St. Pius Boys Primary School. So these are some of the initiatives that we engage in, and this year we decided to come to you, our followers on our social media platforms, to also engage with you as regards to Global Money Week. This year, the event is being held under the theme, Plan Your Money, Plant Your Future. So the focus is really on sustainability, as well as looking at how the individual impacts of our decisions can actually impact the society as well as the environment, which is also something that is crucial for our survival as a society as well as a nation. So we'll be looking at how, as young people, we can broaden our view in terms of how we look at our financial decisions and the impact that they have on the environment. For this particular event, however, we do have a special guest that will take us through personal finance management, how we can plan, budget, how we can save, what are the instruments that we can use to actually invest our finances. She is none other than Mrs. Audrey Mwala, who is the MD as well as founder of Sycamore Consult Limited, as well as Sycamore Credit Limited, which is a registered and licensed financial institution under the Registrar of Financial Institutions. So she will be taking us through this presentation where we'll learn and also gain valuable insight as to how we can plan our finances better so that we can be financially well off as well as financially resilient. I'd encourage you to engage with our guest speaker as she'll be giving really key valuable insight. And also I'd encourage you that if you have any questions, feel free to ask. Those will be attended as we have a Q&A session planned as well. With that, I'll hand you over to Mrs. Audrey Mwala. Enjoy your session. Thank you.
Good morning, all listeners, and a very, very good morning, especially those of us that are in Blantyre. It's a much better day compared to where we're coming from last week. We must begin by thanking God that we are alive to be able to attend to this event, because we know that for us to think about money, first of all, we have to think of life. So our hearts go to everybody that has been affected badly by the cyclones, those that have lost their lives. But at the same time, those of us that are remaining, we'll still have to find a way of surviving, because life is still here in spite of the challenges that we've made. So with that, it's important that as we go through this week, of ensuring that we should think about money that the Malawi Stock Exchange has put, we should now find ways of how we can survive and make sure that we are improving in our finances, but also reckoning that even in times like these would be times where if it happened in future, we can also find some tips that can help us to manage some of the challenges that we are going with through what money can buy. Money cannot buy life, but then money can buy food, and hence the reason why we need to ensure that we are learning some tips to help us to be prepared in future in case there's anything that we need to do. Otherwise, we are very, very glad that we have this time to share tips on how we can manage. The zeal of Malawi Stock Exchange is to ensure that we are financially educated even from a young age. So at this point, as you can see, the focus is on helping our youth to plan for their finances. But I must say that while the youth are the key target, we should also take this as a lesson for us as adults, because I have seen that even adults also that are been in employment for a long time, they equally struggle with how they can plan their finances. And as such, maybe all of us should just wear a youthful hat so that we can listen on what we can do for us to plan our finances better. I can see we have a number of people joining. Albert Kanje, we can see you, and if you have any questions, you'll be able to raise in future. So we'll talk about a number of things, and today I wanted to start by talking about budgeting. The aspect of budgeting is something that we can look at from a broader perspective. First of all, I want to just mention that there is a secret to life, and budgeting is one tool of wealth creation. So for us to be able to create wealth, to have resources, to grow our finances, budgeting is a very important tool. But what I've seen mostly in life is that it is more than just looking at numbers and budgeting on what we can do. But then for us to have financial literacy, it is more of a psychological issue than a financial issue. Why I am saying this is because you find that there are so many people that would have a lot of money, but if they lose their jobs, they automatically start struggling. And yet there would be other people that don't have enough money, but because their psychology of money is right, even if they lost their job, they will still be able to survive. So what I want to emphasize in this presentation is that when we are talking about financial literacy, about wealth creation, it is not so much about money. It is so much about our mindset, how our minds interpret money and how we look at money. So allow me to talk about the psychology part by mentioning that for one, to create wealth and to have good skills in management, the first and most important thing is to realize that money is just a tool, but then the biggest skill that one would have is to have their right mindset. And what is the right mindset? The right mindset is one that is capable of positioning itself in a way where it sees opportunities and where it is able to take risks, where it is able to have the discipline, the mind that is able to realize that growth is important and it's a requirement. And when we say growth, we mean financial growth. Just like a child is born and after a couple of months, there is an expectation that that child should grow and they should sit, they should crawl, they should walk, they should run, and they should begin to get taller and become an adult. So that realization that even when it comes to our finances, it is a requirement that that money needs to grow. And this is where the mindset is very important, because just like a child, for a child to grow, it requires to be taken care of by good parents that are feeding it, that are protecting it, that are respecting the child. Money is exactly the same, because if we have a child that is being abused, a child that is not taken care of properly, they would die. And it's exactly the same with money, that we need to learn to respect money. We need to protect it, and we need to handle it in a manner that will allow it to grow. So we need to realize that for us to be financially educated, the moment we realize that it is more than money, we are going to move forward. So first of all, what I want to emphasize most importantly, before I touch the money part, I just want you to realize that if you don't have the right mindset, no amount of money given to you is going to make you financially well off. That is extremely important. You need to get your mindset right. And you have to know that if you have the right mindset, even if you don't have money, you will always be able to make money. So the mindset is a very, very important ingredient to wealth creation. When you have the right mindset, you know how to handle money. And one thing that you will do is that you're going to realize that for you to grow, you always have to learn to spend less than what you earn. There are a lot of people that will now question this statement by saying that, but life is expensive. So if you ask me to spend less, the expenses that I have are even more than the money that I have already. I'm already struggling. Then how do I spend less than what I earn? Our mind will be thinking, the money that I earn is not enough to allow me to spend less. I spend everything and I even borrow on top of that. That's the answer that you're going to get from most people. But that is the reason why most people are stuck in life financially. What you need to know is that first and foremost, you have an obligation to spend less than what you earn. And for you to be able to do that, you need to remember that there is someone who is ahead of you. Maybe you are working, maybe you are doing a business or any status in life. You have to know that there is somebody who has got more money than what you have. But if you ask that particular person on how they are managing life, they are going to complain and they will tell you that they don't have enough money. And yet what they have is more than what you have. And you wish you had that money. And you believe that only if you were able to earn the kind of money that the person above you is earning, you would have been able to save. But if you were put in their position, you would be exactly the same and you spend everything. This is something that we call the Parkinson's law of money. And the Parkinson's law of money says that our expenses tend to increase to fill in the money that is available and spend a little more. The biggest reason why most people don't have money, they don't have savings, they don't have investments is because they fail to understand the Parkinson's law and they go by the Parkinson's law and they spend it all. If you're going to spend everything, you can never create wealth. You should learn to spend less. Now, besides the person that is above you, remember that in life is very interesting. There is always someone who wishes they were you. They are looking at your status, they are looking at your position, and they only wish how I was able to be like her or like him. I was going to have enough money and I was going to save. So the point is that below you, there are people that are surviving with less than what you have. So the fact that you're not saving today, the fact that you're not investing today does not mean that there's anything wrong with the money that you have. But what it means is that you are living a life that you are not entitled to. Because if you are spending everything, that it simply says that you are living in a house that you're not supposed to live. If you are driving, maybe you are driving a car that you don't deserve. You are eating what you shouldn't be eating. It means you are living a status that is not your level yet. And that's the reason why you are spending everything, because the rule is that wherever you are, no matter where you are in life, you should serve. And if you disobey that rule, don't be surprised that 10 years will go, 20 years will go, you will be exactly where you were, and sometimes even worse. So remember that there is a rule that you need to always spend less. How do you spend less? Those are things that we can talk in detail at a later point, but all I can say, you need to learn to downgrade. And it is not a crime. No policeman is going to come and take you to jail for spending less or downgrading your life, as long as you are saving something for investment, because it is only by investing that you're going to improve your life in future. Remember, you are saving today and you are creating your future. So wealth creation is in the future. You need to learn to sacrifice today so that you can now save for the future. You need to also understand that for you to improve in life, it's very important for you to again go into your mindset to see opportunities. We have been blinded by thinking that the only way of surviving in life is by having a salary, and we close our eyes to other opportunities of how else we can create money. All I can say is that think around you, look around, open your eyes and find ways of making sure that you are creating income more than what you're currently getting. It is possible to get more money through an increased salary. You need to find a way of how your salary can go higher. But at the same time, you also need to find another way of creating other parallel structures of how you can get more income besides the salary that you have, or besides the one business income that you have. So think about cutting down your expenses and think about increasing your salary for you to increase the money that you're going to set aside for saving. When you are in a financial discipline, for you to know that you're doing the right thing, you need to create a budget. A budget is going to help you to be disciplined, to know when to stop spending, and it is going to also create a clear picture of the boundaries that you can go into in your finances. So a budget should include all the income that you have, and it should include all the expenses that you have. But the fundamental to your budget is to ensure that, first of all, you have to set aside money for saving and investing. People that are financially illiterate, they spend first and they save what's left. But financially literate people start by saving and investing first, and then they live on what is left. If you do it the other way around, you will never be able to make progress in your finances. The expenses will always increase. There will always be something that will come in our way that will justify that we should spend the money. And before you know it, all the money that you had was gone. So ensure that your budget is, first of all, prioritizing money for savings. You should always remember that on a monthly basis, especially for those of you that are working, you always pay taxes. And we don't pay taxes voluntarily, but we pay taxes because we are forced to do that. And before we even know it, the taxman has already taken the money from our income. So it has to be exactly the same formula as you are spending your money, so that your budget should allow a portion of your money to be taken out automatically, and then you survive on the balance. Whether it is enough or not, that's your problem. You have to solve. But you need to make sure that you are surviving on what is left and not saving what is left. You need to adjust in life, and adjustments are fundamental. I myself have done so many adjustments in life downwards for me to make progress, to move forward. So it's very important that you should adjust your expenses. Some of us think about friends. Some of us, we think about society. What will people say about me if I start living this lower standard lifestyle? But that is the reason why you always be in financial trouble for the rest of your life. You need to remember that society is not going to put money in your pocket. Status is not going to put money in your pocket. You have to learn to downgrade for you to move forward. And the good thing about it is that the moment you start downgrading, the moment you start this game of saving and investing, it doesn't mean that you do it for life. It's just a period. So after a certain period, you find that what you've been saving and you've invested, it has now grown, it has multiplied. So it is important that you should have a disciplined budget. And now, after you've prepared your budget, you need to think of, where can I save my money? You can save your money by putting it away from your bank account. You don't save your money in the same account. You have to save it somewhere, and you have to ask yourself, what is the purpose of my saving? When you are saving money, you need to have objectives that could be like emergency. You may need some money for emergencies. It could be a holiday, or you want to purchase something, or you just want to go maybe for a holiday somewhere. You can save your money. Even for education, you can save your money. So for you to save the money, you need to find a saving instrument. One of the instruments that I have used myself for saving, that I've found to be rewarding, but at the same time very, very easy to access, is to buy treasury bills. Treasury bills, you can buy 1 month treasury bill or 180 days or 360. So you can actually use those as an instrument for saving, and you can spread them. So you can save money that you need easily by putting it maybe in a 1 month treasury bill, and then you can go into another semi-saving where you can put it maybe in a 180, because the interest rates are different. The yields that you get there are different. So you can use that. But you can also use the normal savings that you get from the banks, even though the interest is usually very low, but you can keep something just for you to tap into, but not a lot. But if you want to benefit from your saving, the best is to save through these instruments, the government securities, which you can get through your bank. You can tell your bank to buy for you. You can also get them through the asset managers, and you can also get them through the stockbrokers. They can help you to get these instruments. You can also save using insurance policies. There are different insurance policies at the insurance companies like Old Mutual, Nico, Vanguard. They have different saving policies that you can have. Again, it's what you get is lower than what you would get from directly investing yourself, but then it is better to spread your risk. So you just need to manage your portfolio to see how much do I put in the insurance policies, how much do I put in the banks, and how much do I put in the government securities. So those are some of the savings instruments that you can have. You can even save by also including the saving clubs that you can join. You can decide to join a voluntary saving club. You can even decide to form a group with your colleagues where you'll be saving. That's part of helping you to keep money for emergencies. But then saving is just a saving for you to use for emergency. A saving is not a wealth creation instrument. So you need to find also ways of how you can grow money, and you grow money through investing. One of the best investment avenues that I have seen is to invest in equities, mostly listed equities. And these are shares where the Malawi Stock Exchange has created a market where you can buy. At the moment, there are 16 counters trading on the stock exchange where companies are selling their shares. And I can tell you that everybody who is investing on the stock exchange right now is just smiling. If you go in town, if you find someone smiling, ask them. They will tell you that my shares have just gone up. All of us that have got money invested on the stock exchange, we are smiling. The stock market has just gone crazy. It's just going up. We call it bullish. We say that the market is bullish. So right now, the market is in the greens. So the figures are just going green, green, green. If you invest, you are going to gain a lot, and it's a smart way of investing. You just need to put your money there and just watch it. And by doing that, you're going to have interim money that you're going to receive through investments, that you're going to receive what we call it dividends. You usually get it once or twice, semi-annually, or you benefit by what we call capital gains. Just for example, when we were closing last year, the share price of company of, I remember, Ilovo was around 300, but today it's 700. So if you can imagine, if you bought 2 shares of Ilovo, then it means you'd have benefited 600. What about if you bought 4 shares? How about 5? How about 10? How about 100? You would have made millions by investing. When Airtel was going on the stock exchange, the share price was 12 kwacha. I think it was 12 kwacha 69. Right now, as I am talking, it's at 68,000. 68 kwacha. You can imagine. FDH is now at 34. You have NBS. I think it's also around 34. 38. You have so much going on the stock exchange where people are just making money without knowing. Actually, when you invest on the stock exchange, you go to bed with a certain level of income. By the time you are going to bed the following day, you've made money. The stock exchange is a place where people are making money and they don't have to do anything. They are busy in their offices and money is being made for them. For me, I look at the stock exchange as a money-making machine. A machine where when you have put in money there, it starts spinning money for you. And it's important to invest on any of the shares that are listed on the stock exchange. You will not regret. Another instrument that you can use for investment will be government securities. Some of them would be treasury notes and treasury bonds. So a treasury bill is a short-term instrument that you invest in for a maximum of 1 year. So usually you buy the treasury bill at a discount. So, and then when you are getting your money, so for example, you can buy the treasury bill price would be, let's say, 1,000. I'm just giving an example. But when you are buying it, you buy it at, let's say, 960. But when they are giving you back, they're going to give you the 1,000. So your yield is that 60, is it 40 as a percentage of what you invested. So you get it it comes in 3 different tools. It can come as a 90-day treasury bill where after 90 days, you're going to get back your money. Of course, they take out withholding taxes. Or you can buy 180 days. So after 180 days, you buy it cheap, they give you back they call it the face value. And then you can buy a 1-year treasury bill. The difference is the interest, the yield that is attached to that. So like for 90 days, for 180, it could be 19.5% per annum. So you get that less withholding tax. If it's 180, it could be around 17. If it's 30 days, it could be around 16%. So those are the yields that you get when you are buying treasury bills. So treasury bill is an asset. It's an investment asset, but I usually look at it as a saving asset because it's short term. But then you can keep on rolling it. But when you're looking at treasury notes, now they are there for a period of more than 1 year. It can be 2 years. Sometimes it can go up to 10 years. But they are also bonds, government bonds. So the government bonds, they also are more or less the same as treasury notes. But usually the period for government bonds are longer. Sometimes it can go to 10 years, sometimes even more. And there are some bonds here in Malawi we don't have, but in other countries there are some treasury bonds where the yield, the period actually even goes up to 100 years. They are called centenary bonds. So it means, so when you buy treasury bonds, you get 2 things. With treasury bills, you just get the discount. You get 1 payment back. So, but that payment is paid upon maturity. With the treasury notes and treasury bonds, you get 2 payments. So in twice a year, you receive what we call coupons. But coupons are just a fancy word of, you can look at it as interest, but they just call it a coupon. The word is historical. It came from long time ago when, before digitalization, you would buy a treasury bond and it would literally come with some papers that are attached to a certain big paper, where after 6 months you would peel off one section of the paper and you present it, then in return you're given money. Then after another 6 months, you peel another coupon. So that paper was called a coupon, and that's why they are called coupons. But otherwise, it's literally, and you can look at it as interest. But besides that, it's the same, just like it is the same with treasury bills. You also buy treasury notes and treasury bonds at a discount. So at the end of the term of your investment, if it's 2 years or 3 years, you now receive the coupon. Then you also receive what we call the face value. So the face value, which is the maturity value, is not the money that you paid, because you usually don't pay the full price. You pay the cost. So the cost would be maybe a treasury bond of, let's say, 1 million. You're going to pay maybe 940. So upon maturity, you're going to get the whole 1 million, but then in between, you've also been receiving semi-annual coupons. So you benefit from that over the period. It could be 2, 3, 5 years or 10 years. So the difference between treasury bills and treasury bonds is that with treasury bills and treasury bills, you only receive the yield at the end. Treasury bonds and notes, you receive coupons and the discount at the end. I know that some of you may be confused because you may have bought treasury bills through a stockbroker or an asset manager. You may have been told that they're going to give you 14.5%. What I wanted to say is that the treasury bills are auctioned by Reserve. In fact, there's an auction process that happens, I think, every Tuesday. It happens every week. So there's an auction where now the stockbroker or the asset manager will bid on your behalf, or your bank will bid on your behalf. So if they bid on your behalf in your name, then it means you are going to have the title. It is going to be your instrument, and you're going to have the full price that the government is giving for that particular instrument. But sometimes you go through a stockbroker and they will tell you that, oh, you want TBs, we can give you, let's say, 14%. What that means is that they are the ones that go and bid. So they are the title holder, and then they give you interest. So I hope you can understand the difference, that there's a difference between you asking the broker to bid directly for you and you investing with the broker, and the broker takes that money as if it is their money and they bid themselves. So it's like another arrangement where now they give you now a separate contract between you and them, where they give you the lower percentage. So maybe they would give you about 14%, but then when they bid, maybe they bid on a 1 year, or they bid on a 180, where the interest is, the yield is higher. So you can invest in those instruments. The secret about, okay, so I think the other way you can also invest in, maybe let me just finish on the securities. So the secret about investing in government securities is to find a way where you are not touching the coupons. What you need to do is that once you have invested, and something that I have done myself as well, is to use an asset manager where the coupons will be landing in their hands so that they should reinvest. So if you reinvest everything that you received, and then when the instrument has matured, you reinvest it again, you do that over a period of, say, 10 years or so, you're going to create wealth. A lot of people don't understand wealth creation because they look at the short-term mind, where every time they get the coupon, they eat it. It's the same as a chicken is laying eggs. So every time that they lay an egg, the chicken eats that egg. Then it can never hatch babies. But if that chicken lays an egg and then it doesn't just eat it, it tries to hatch into some chicks, then it means that tomorrow they won't be the one chicken. They will be the chicken and the chicks that would have grown to a level where they themselves can also lay eggs. And if those eggs are not eaten, then it means that the mother hen and the other smaller hens are laying eggs together, and they can lay more eggs that will hatch more chickens. It's called the compound, the principle of compound interest. That's what happens in investing, that only those that are wise, that don't eat the interest when it comes, they benefit from what we call the power of compounding. So everything that you get, you're supposed to reinvest it. So if you reinvest, you start earning more than what you earned in the first year. Then when it matures, you reinvest it again, then you earn more than what you earned in the previous year. It matures, you reinvest it again, you earn more. So wealth creation is actually in the long term. At the beginning, you may find that you are not gaining much. You feel like you're not doing much. So you will not be able to benefit a lot. But then if you stay persistent and hold on, you find that over let's say the first 5 years of your journey to investment, you may think that you are not earning anything. But the next, let's say 5 years, maybe in the 15th year, just for example, what you can earn in okay, what you can earn in year 1 to year 0 of your investment will be peanuts. But if you stay on the journey, what you can earn from, let's say, year 15 to year 20 of your investment will be a miracle. If you stay disciplined and do it a little more, even for year 25 to year 30, it will be supernatural. You will not understand it. That's the power of investing. Now, on the stock exchange, the secret about the stock exchange is to keep on investing and investing in more than one counter. So you have to keep on investing because you need what we call portfolio diversification. Because sometimes you find that some share prices will go down, some will go up. But then if you are well diversified, on average, everything goes up on average. So the stock exchange is the wonderful way of wealth creation. And I can tell you that a lot of people are smiling on the stock exchange while other people are wondering why their pockets are empty. But other people, on the stock exchange, if you've stayed there for long enough, you can even make 10 million within a day. You can make 20 million within a day if you have invested long enough. It's a money-making machine that you can use. Of course, I'll focus on the stock exchange because today this initiative is by Malawi Stock Exchange. Otherwise, there are so many other investments that you can look at, like non-listed equities and real estate. But I think for now, I will just focus on the stock exchange and the government securities because both of them are traded on the stock exchange. Even the government securities, you can buy, and there's a secondary market for government securities on the Malawi Stock Exchange that you can use. So I think I would have loved to say more, but I think I can see that my colleague is here. So I will allow her to speak, then maybe I can come again.
Thank you so much for that wonderful presentation. I think it has been quite insightful in terms of what one needs to do to plan and budget their money better. I think we saw some questions that came through from some of the audiences. There was one question on what requesting to explain a bit more on what treasury bills are, and I think you went through that quite well. These are essentially government securities. They're quite short term. You have the 91, 181, 364. For you to participate in these particular instruments, you can go through your bank. They'll be able to assist you. The cost is quite reasonable depending on the amount of funds that you have. So normally it will be below 15,000 for them to participate within the bid for you. And also there was another question, I think, on on the stock exchange in terms of the share price movements. I think that is a good observation in terms of now what happens on the market. I think one of the things that we also try to emphasize when it comes to investing is to the investors to have an understanding that each and every investment has a risk attached to it. And you find that normally in the world of finance, we say that where there is high return, normally the risk is also higher relative to some of the instruments where perhaps the return is low. You find that the risk sometimes is normally also on the lower side. So this is why we try to encourage you when you're investing, be it on the stock market or any other instrument that you want to invest in, engage your advisors, engage the key persons who can actually assist you in identifying what instrument is right for you, given your risk appetite, given your profile in terms of how long you'd want to invest those funds for. So those are just some of the key issues that we would want you to really know, so that at least you're able to make the right decisions when you're investing on the stock exchange. For those that have not yet posed questions, we're still available. You can still do so even after the broadcast is done. We can still engage with you in terms of addressing some of the questions that you might have, either for the stock exchange as well as for Mrs. Mwala. Perhaps I'll just pan it over to Mrs. Mwala for her final concluding remarks, so that she can also leave us with some guidance or practical things, tips that we can do. I know she has already touched on that in terms of now trying to automate our savings, which is really quite key when it comes to saving, especially if you're looking at the long term. But perhaps she has final words that she would want to share with us, and then we can close our event. Just to also explain that since Global Money Week is a 1 week long event, the exchange will also have other initiatives. For instance, we intend to have an open day from Tuesday tomorrow up until Friday, where those who would like to learn more about the stock exchange as well as some of our stakeholders, they can come to our offices. We're in Victoria Avenue. We're next to National Bank, opposite the old Spa or People's shopping shop that is also next to Pep stores. So you can find us there, or you can also engage with us on our social media platforms to give you the adequate directions. We'll have some of the stakeholders within the capital markets, within the stock market. We'll have brokers. We'll have some of the representatives from the listed entities. If you'd want to know more about the companies that you'd want to invest in, they'll also be available. So feel free to pass by and visit us. Would want to see you and really get to hear how we can engage with you better in terms of now providing this platform where you can actually invest and build your wealth as Malawians, as well as specifically young people and everyone in general. So I'll hand you over to Mrs. Mala just to give final remarks, and then we'll close our session. Thank you.
Yeah, thank you very much. My closing remarks would be, I hope I can say them within a short period, would be that wealth creation is a conscious choice that one has to make. If you don't have a plan and if you don't know what you're doing, you'll be wondering that you've worked for 10 years, 20 years, you're exactly where you are. You need to get the formula right. And the formula to wealth creation is to have a vision, to know that I would like to get here financially, and don't be embarrassed about it. To know that this is what I want, I'm going to commit it to God, I'm going to ask God to bless me, and you need to understand that you too deserve to have that wealth, and also to have a mind of plenty, to know that there is plenty of money around. It's just that you need to figure out the formula of how part of that money can come into your pocket, because it's not like there's scarcity of money. There is plenty of it, I can assure you, but you need to find a way of getting it into your pocket. There are so many people that are holding your money. There are so many companies that are holding your money, but you need to find a way of making them to voluntarily give that money to you. That's something that you need to figure out. When you are young, it is the best time to have these tips, because you have to start while you are young. Because the moment you get into the bad habits of spending everything that you have, you'll be caught into this race where you're just going round and round. So the youth should start from the little that they have. Investing does not mean that you should invest with a lot. You've been told already that even with 15,000 kwacha, you can start investing. So you should know that even on the stock exchange, a share, for example, a share of a company can be 10 kwacha, it can be 20 kwacha. You can buy. There's no minimum amount that is regulated. Even one share you can buy. So you need to start investing for you to create wealth. You also have to know that for you to have that wealth, you need to think about the long term. What I am saying for you to fully understand and relate is that some of us here are in very good positions in our offices. We are bosses, we are driving good cars, we have got a life that is comfortable, but that did not come overnight. It didn't happen in 1 year. It required you to go to kindergarten, it required you to go to Standard 1 and then go through primary school, and then you went through secondary school and university. You invested over 20 years of your life to be able to receive the salary that you're getting today. And what I'm challenging you today is that is step one of life. There's another step of life where now you can have so much money that you would be able to even donate 1 million, 2 million, 3 million. You can donate all that, but you can do that by now going into the second level of investment. And that second level of investment is now investing your money. While you are in school, you were investing your time and your energy. Right now, start investing your money. So you invest your money, and when you are investing, you don't invest for 1 year. You don't invest for 2 years. If you invested 20 years for you to have a job that pays you the salary that you have now, you need to invest another 10, 20 years for you to have money that you can never be able to use in your life. You'll be able to now make a difference in the lives of other people and contribute to our society. And in addition, you should also know that by investing on the stock exchange, you are technically going into business. For example, if you decide to invest in which counter should I pick? I don't want to focus on just one. Let me pick Nico. For example, if you invest in Nico, it means you've started an insurance business because you are the owner. You can actually go to Nico and make demands that I'm a shareholder in Nico. I want to know how my business is doing. They'll be able to give you directly if they have time to attend to you at that time, or if not, they will tell you that we are going to give you this information on such a day. We are going to have what we call an annual general meeting. So the whole NIC will be answerable to you because you are the owner of that company. So if you want to become an owner of companies, if you want to start doing business, go on the stock exchange and decide which company you want to become an owner, and then you invest, then you'll be there. So wealth creation doesn't happen overnight. I just want to say that, one, wealth creation doesn't happen overnight. Secondly, wealth creation doesn't happen accidentally. It is a purpose. You have to purpose it, and you have to know that you are in the process of building wealth. And now that requires sacrifice. It requires dedication. It requires hard work. It requires faith. It requires resilience. And the question that has been asked there, that shares go up and down, yes, they do. They go up and down, but they go up again. They go up and down, but they go up and down. What we call the interesting thing about the stock exchange is that it moves in what we call an upward trajectory. So what it means is that it will be up, it can go down, but then it will go up again. And oftentimes, when it goes down again, it doesn't go down below what it was before. Oftentimes, it just goes down slightly and it moves up again. So the trajectory is usually upward sloping. In the end, you're going to benefit. For me, I've done an analysis of the stock exchange, and the stock exchange has gained a lot from the time it started to where it is here. It has gained up multiple of billions. People have created wealth, and if you are not on the stock exchange, you are a loser. If you want to become a winner financially, if you want to build wealth, go on the stock exchange. It is a money-making machine.